me. Can you see and hear me clearly?
I can.
Okay, so I think we could just roll in with it. Um, for our loyal listeners, you'll know this is not our regular time. We are adding Wednesdays 3 p.m. to the schedule from here on out. So we'll be doing the closing bell on Wednesdays for you. And just if you're watching this going forward, we'll be here Wednesdays 3 p.m. as well as Mondays 11 a.m. Um, so yeah, that's that. Hello, George. Interesting market this week so far. Yesterday was a bit of a bloodbath. Today seems slightly better. You want to explain kind of what we're seeing in the markets so far the past 2 days?
Yeah, I mean, we're pretty heavily short right now in the Prospero portfolio. So we surprisingly did pretty well today. We've been picking shorts. I'm actually part of what we're going to do here today is actually we're going to review how I do the model portfolio and I do the updates. So especially those that aren't trading letter subscribers, you're going to get a really nice bonus that is normally reserved for our paid users. And yeah, like it's a very interesting market. You know, we kind of expected a little like leg up from the good news about the shutdown being delayed. And are you changing? Oh, there we go. But we ended up having like that kind of wear off a lot faster than we thought. But in this like weird market that we've seen, like got some disappointing jobs numbers, but that kind of makes everyone more encouraged about rates, which is kind of what we've been seeing more and more. And that's been pretty interesting. So yeah, I think we're going to look at one of the things we're looking at the end. I'm actually looking to get a little more data on how QQQ and SPY net option sentiment are performing. And then I'm going to update my portfolio a little later. But yeah, I'm happy to be doing this on Wednesdays. Hopefully we'll start to get some like different people with different schedules in terms of, people that are able to watch. But yeah, it's exciting. I'm very happy that Stephen can make more time available to be a moderator. And I think, yeah, we're going to be that much better at being able to, help you apply the signals, gain confidence in what you're doing, get more insights into the process and how we do everything. So yeah, pretty excited about that. Not as excited about the market, a little confused by it right now. I'm going to have a very close watch on how it develops tomorrow because, today was pretty good after yesterday was real bad. So I really need, and this is a good lesson, a third data point on where we're going to go. Because right now, at least personally for me, it's very hard to read exactly what direction this market wants to go. And that's as someone that's been pretty confident the last few weeks in like both a bull turn and then the week before like a bear one around when Powell was speaking. But I'm seeing kind of less certainty than I would like, which is why I'm going to personally keep close eye on QQQ and SPY net option sentiment tomorrow. But also, I think I'm going to take some wins. I've been having like a lot of shorts do well lately. And actually, my shorts to longs are about 3-1. So I think I'm just going to collect some of my wins just in case it opens high again tomorrow, and I'll just like lose the opportunity to get my gains. So you'll get to see how I'm doing that and how I'm approaching it towards the end of the stream.
Yeah, and one thing I wanted to ask you specifically is I know like you're a very detailed stock picker, so this question may not be directly for you, but I feel like with rates going so high, are they starting to look like a good investment for some people? And I know it's impacting stocks, and that's part of the reason why we've seen them decline. But so like without rates going lower, can we see the stock market rise?
Without rates going lower, can we see? I mean, probably like yes in the short term, but like for like little runs, but no, not we're not going to get any kind of sustained bull run in my opinion unless we see I would say some much more dovish, softer talk from Powell. Inflation numbers coming in good. Like, I don't think, like, I think the market's being pretty clear that there's support, especially for technology, that is going to prevent it from going too far in the bearish direction, at least unless we have some economic news that's unexpected. But I absolutely do think that that there's only so high this market is going to be able to go until some of these important macro questions are answered.
Yeah, so kind of in the same area, I wanted to ask you, is there any areas of the markets that are directly benefited by rates? Because it seems like they are going to stay higher for longer, as everything we've seen with Powell and the Fed in the past week, month. So does that benefit any companies directly?
Yeah, but I think this is like, well, I want to answer a first part of your question, which is like, well, it wasn't really a question, but something that you said, that where you're just like, well, it's not going to affect like rates. And I think there's a big difference between like yields based on where people expect rates to go, um, and actual rates. Because, like, as we saw earlier in the year, when Powell kind of got scared by the Silicon Valley Bank thing and there was a huge rally, basically he was very reassuring that the Fed would take the proper precautions to make sure the economy was supported. So even something like that, it doesn't have to be an actual rate decrease. It could just be something that Powell essentially says that reassures the market that maybe they're overestimating the rate increases or the length that rates will stay elevated. And I do think that's very possible if inflation kind of subsides more than I think it did in the last reading. I think part of what's happening here is the last reading was not as encouraging as I wanted it to be. And I think some other people thought it might be in a bull case. And I think that we could absolutely see these things change. And in terms of the second part, in terms of like what businesses do well, I absolutely think this high interest rate environment is benefiting finance companies. I've actually been surprised by how well they've performed this year. And I actually expect that to be the same. The market is clearly showing that bank stocks, financial institution stocks, like that, they're more excited about the revenues from higher rates, and perhaps the assurance of certain kind of returns and high interest returns, especially if you lend, which a lot of these financial institutions do, than they are about defaults hurting personal credit. And that's clearly an interesting thing that we've seen and we've focused and had some wins on in the newsletter, that it actually looks like the credit crunch that we've been talking about, that there's like kind of mounting evidence of, people seem to be more concerned about its impact, or people and institutions and traders seem to be more concerned about the impact on consumer goods, consumer cyclical stocks, than they are about financial institutions, which I think is very telling about how much these financial institutions are making in this higher interest rate environment.
So to bring up some technicals, which I know we don't really talk about too often, comment in the chat right now if you're watching and you look at stock technicals. But I saw an article that said that McDonald's and Wells Fargo are about to death cross. And for anybody who doesn't know that, it's when the 50-day moving average crosses below the 200-day. So to ask you directly, do you think this is important for those stocks, and how much impact do you think it'll have if the death cross occurs?
So we'll have my little speech on technical analysis, which is actually you'll see when I do my little model portfolio update later in this stream, that I'm increasingly using technical analysis as a verification point. I don't really like it as a reason to invest. When people are just like, oh, technicals are good, I'm going to invest solely based on that. I think you have to be a very, very like excellent trader and also have a lot of time on your hands to be able to watch technicals, to be able to use that as your only trading source. But we really love, and we like increasingly are recommending in our newsletters, getting your trading ideas, verifying them, in Prospero that they're good, and then taking the technicals on top of that. And I'd actually recommend just going TradingView technicals, a very easy way. You can just Google the symbol that you like, go to TradingView. That's what I do on a basic level. I'm like advancing my game a little more. But yes, obviously what we're saying in terms of McDonald's, like we are definitely like, it's not surprising to see the death cross there, because I do think like large consumer goods places, especially a place like McDonald's that, tends to be something that people might cut back on. Like, yeah, it's cheap, but it's also fast food, and you might end up just like opting for groceries as opposed to going to McDonald's. Maybe that's a treat for you, but in general, if people are looking at, obviously people are worried about people cutting back and cutting anything. That unfortunately, I think even just like how many meals they eat for the less like fortunate or well off, all of that can impact something like McDonald's. And then, Wells Fargo, it's interesting that you mentioned that within what we just talked about, which is that, like, sure, a lot of financial institutions can take advantage of a high interest rate environment, and it's very good for the well prepared ones. But a place like Silicon Valley Bank actually was killed by the high interest rates because they did something that was actually pretty silly as an investment bank, and they had all these like fixed rate instruments, which is just like elementary for most people that are experienced like high finance investment buy side. Like most people know, even at a basic level of being at a hedge fund, understanding the economics well and the macro picture enough to be there, that like that is not a smart thing to do in rising interest rate environments. Like trying to weather that by getting fixed rate instruments. But that says something about the way Silicon Valley Bank grew. And they kind of just like really grew their asset base, like going after, pretty famously, like giving someone like Mark Zuckerberg a discounted loan to bank with them. And that's their growth method. But they didn't kind of cut their teeth in the investment banking world like a lot of these banks have. And as is the engine for their growth, their asset management. Like their growth engine was more servicing for, wealthy entrepreneurs, tech people, things like those loan rates, but they were not known as like a skilled investment bank. And, they died that way, which brings us to Wells Fargo, which I imagine that is why they are being treated differently. I actually saw Morgan Stanley. That's in a model portfolio as a short. We are just seeing some general momentum change downward in the financial services industry. But I would absolutely say that that Wells Fargo is also not really known for their like deft maneuvering of the investment markets. So I imagine similar to Silicon Valley Bank, they might have some more revenues from their higher interest rate activities. But on the other side, I also definitely think that they probably have some pretty bad assets that are scaring people and that are making them kind of hammer those stocks harder than some of the other finance stocks.
Yeah, so bringing up Silicon Valley Bank, it just triggered in my mind that there was so much fear around these smaller banks and these regional banks. I believe, what was that, like February, March area, and it seems like nothing has changed. Like rates are still really high, yields are still really high. Do you have any insight into how those banks are doing? Like, where did the fear go?
Oh, yeah. I mean, so the thing about financial collapses is they are chain events. And basically, like the whole too big to fail thing was basically because some of the toxic banks were dragging down other toxic banks. Because it's basically like, let's say you're Bear Stearns, you have all of these agreements with the other banks. Some of them are stuff that you owe them in these transactions. Some are actually assets that they bought for you, that maybe there's like some insurance agreement that you have with them. But basically, like when you sink, all of a sudden you're tanking their balance sheet already because they were expecting money or assets or whatever back for you that you're never going to give them. So it starts to cascade out. But when that is the main risk, and that basically answers your question. Like once that stopped, and you saw that a little bit with like Credit Suisse, and UBS, like it is kind of like a chain reaction. But then once it's contained and JP Morgan buying Silicon Valley Bank was a really helpful part of that, because all of a sudden you create a lot more okay, whatever assets we have or whatever dealings we have with Silicon Valley Bank or whatever, JP Morgan's going to take care of it. So you get rid of the fear there. And that's why the government stepped in and helped them with the acquisition, because they knew something like that would just help with the fear basis. But yeah, a lot of that is panic. And the other part of it wasn't the toxic assets that sunk Silicon Valley Bank. It was that, someone got wind of the toxic assets and people started to pull out their deposits. And all of a sudden the toxic assets became more and more of a burden as people pulled their money out. And that's an important part of just stemming the fear. Part of what was happening with those banks is a lot of people lost faith in them. Then the banks start to get scared. There's whispers, banks know really well how kind of solvent each other are, because there's things called counterparty risk when you do business with a bank. And a lot of these businesses are doing banks with each other. And my theory, I don't know this for a fact, but my theory is that Goldman Sachs sunk Silicon Valley Bank, because Peter Thiel was one of the people that blew the whistle. And Goldman Sachs has something called SecDB, Securities Database. They basically pioneered this. When I was in finance as a young person, everybody was like, you don't do business with Goldman. Goldman gets the better of you. And basically something like SecDB did that, which is a universal securities forecasting pricing database. But something else that SecDB can do in its sleep is look at Silicon Valley Bank's assets and liabilities, just analyze all of your information, which pretty much streams in, because if you want to do business as a bank, you want live access. You need to know for your own risk profile, how your assets are expected to perform. So a lot of these places pretty much have live connections to at least the assets that you're doing business with. And so, yes, pulling on the thread that we're talking about a little more, some of the other places M&T Bank or some of these other ones that are these regional banks, essentially what you're looking at is investment banks shorting them because they see their assets and because they're legitimately worried as people pull money out of those accounts. So it's it is absolutely most important thing, a perception thing. And why, essentially Powell actually did do a lot by basically being we're going to support the market. We're going to start lowering rates, blah, 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 all that stuff, even though it didn't end up happening. He said what he needed to say to stop it. And that's one of the jobs of the Fed, because immediately once you have people stop pulling out deposits, stop the stock price going down, because just as an additional lesson, equity is part of your capital structure, right? So how solvent you are and how much money you can raise is absolutely based on essentially what the value of your equity is. So that's how it could snowball really quickly. If your stock goes down 20% a day, all of a sudden your means to raise capital, your solvency, the way these other banks view you, has a 20% hit. Then they're more interested in shorting you. Then if you have your deposits in there, it's going down more. You're thinking about pulling out your deposits, and it becomes this death spiral, basically, which we saw happen to a few banks. And once that hits a fever pitch, it's over. But in my opinion, Powell just, he said the right things to stop that cascading effect. And once it stops, then it's over.
Yeah, Powell's gaslighting us. He's just telling us what we want to hear. But I mean, I guess it's fitting because the market's in a little rough spot, but it seems like a lot of our topics today are negative. And I have another one coming for the people. Tim Cook sold $41 million worth of Apple stock, which was his biggest sale in I think 5 or 6 years. And what do you make of the CEO of the biggest company in the world selling that much to the stock?
I mean, I think sometimes too much is made of this stuff. I'll say that first before I say all my other opinions. Also, secondly, for those that don't know, like a lot of how like why people that run startups, why it's an attractive career, why people like end up having like so much wealth is like you essentially don't pay taxes because if you own equity in a company, especially as a startup, I mean Tim Cook obviously did, but you don't pay taxes until you have a gain, a realized gain. So if you're just owning equity, like let's say, when Prospero gets to be, it's like, $1 billion or more company, like I'm holding on to my equity that I had from the start, like, and I can take out loans against that equity. And loans are actually like you get tax breaks from loans. So I'm borrowing against my equity. I'm not realizing any gains. I don't really have to pay taxes. If anything, I have like tax deductions. And that's how it works. But that being said, like sometimes people just need money, they want to make another investment, but that is where it leads. Like I do find it inherently concerning if the CEO of a company is like prefers another investment. And that's kind of even what I say sometimes when some people ask me to make angel investments in their company. And I'm just like, well, I'm putting my money in Prospero. Like that's what I'm in. And like I expect it to grow. I expect that to be the best investment I can make, the best return, just making sure my capital is like available for Prospero. And luckily it looks like I won't have to be financing it, like being the backstop for Prospero for much longer, but maybe that will change. But I definitely don't see myself selling my Prospero shares to like make other investments. That's for damn sure. But like that gives you all the perspective. Like it is never like I think sometimes it's overblown how like people can like sell, but no, Tim Cook selling like that big of a chunk pretty much means he expects the stock to go down. Like, the reverse is like Apple does do buybacks all the time. So yeah, like it's the opposite of that. Like if you do a buyback, you're just like the stock is undervalued. If you're selling your personal stock, that's about as big as you can get in terms of signaling that you think the stock might be overvalued or you think there might be some pain coming for the stock. And just like to go on that a little further, like Apple was shrank in revenues. Like it was the only big segment to shrink in revenues. Like, and especially like if you look at like they had some growth in some areas, but like iPad, iPhone, like those are shrinking, and that's not good. Like the App Store is doing well, and there's like little things like that. But like, yeah, your main product line shrinking. Like Tim Cook isn't necessarily wrong that if the economy is questionable, like they touch consumer goods, obviously, and irrespective of like those consumer goods economic worries, your sales are already going down. That's a problem.
Yep, it's going to be interesting to see how Apple plays out. I mean, it's almost so big that it can't keep getting bigger, but I mean, Apple Car coming, so we'll see.
Yeah, they did say that. We were talking about that, and they
Yeah.
did like say that it's coming, and like it's kind of funny. I don't know if this is the way that it just like got released in general, but like I think it was like Elon Musk that was basically saying, "Oh, I know they're hiring like 1 million engineers. They're building the car." Like it's just like a really funny way of the story breaking. But yeah, I'm interested. Like what they said, like it's like one of those things where they had no real information. They're just like, oh, you can unlock the car from your phone. It's like, oh, that's okay. Like I don't think that's a decision point on buying a car, but it's gonna be the design. But it's gonna be super like it's gonna be super interesting to see like what kind of design and experience and everything like that, because I think that will tell us a lot about the company like longer term, by the way, because there was never a new product that the Jobs team didn't absolutely nail, especially his second run. Like his first run, he had some kinks to work out, I would say. But his second one on CEO, like everything nailed, from like the event to how they rolled it out. Like he was like a master of that and managing the story. So it will be, I mean, I don't know, I could be wrong. I don't think we've really seen like Tim Cook roll out a new product line yet, like new versions, blah, 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 whatever. So like that will be very telling, whether it's the VR headset or the car that comes first. I'm going to be watching with great anticipation to see how that is handled, because that would give me, if they do one of their rollouts, if they're there on design, they actually like have something that people can get excited about and something competitive. I will view them totally differently right now, which is like where I put them now is like pretty much the bottom of the big seven.
It's amazing how like well secured they keep their product innovation. Like I have seen absolutely zero photos of a car, and you'd think that somebody would snap something. One person on the team would get some kind of glimpse of something, and it's just locked down. So we'll see when that comes out. They didn't give a time frame in that new update, right? It was just like that they are working on it.
Elon Musk said like next year. Like I think was his. I think that's what he roughly guided to.
Elon's
But
next year.
he seems to be the best source of information. Like
Elon's next year means 3 years from now. So
yeah,
we'll see.
yeah, who knows? Maybe he's just saying that it's next year when he knows it's going to take longer, so people are disappointed. But yeah, I think that it's just like it's a really interesting thing. It's a really interesting thing to watch, and like everything that's happening with cars right now is really interesting. Like from the auto workers to the EVs. Like cars are one of the more intriguing markets in terms of like what like in the short term it's really hard to predict, and in the long term it's also like really hard to predict. I could see like so many different like winners and losers or whatever, and it's just like we've talked about, I never really count out like the establishment in the US. So it's going to be really interesting to see like what I think especially GM has up their sleeve, because I like what they're doing better in like I'd say especially self-driving. But yeah, it's going to be really fascinating to watch that market play out.
I agree. And maybe we'll do one more topic and then we'll go into your portfolio update. When I said this before, I was asking you about maybe if China looks interesting for investments, but I think I want to maybe broaden it out. And just because the US economy is so questionable right now, maybe China, but also is there any other part of the world that you say, I think their economy looks strong and their stocks in that market look good?
Yeah, I mean, I like Alibaba always looks pretty good in our signals. Like Neo looks less good. I China's tough. Like and in terms of speaking of like international markets, like I think India is pretty interesting, just as like their middle class is still really forming. And like I'd say to like a lesser extent, South America has some interesting things. Obviously, we like Mercado Libre for that reason. I would say like there's some really interesting plays in Africa, and I think a lot more attention there. But I'm going to stop short of getting too specific there because I don't think that's for most people. But I would encourage people, if they're looking for like high returns, interesting. I think microloans in Africa are pretty interesting to get a return, have like an alternative data, and have some exposure to that market. I actually like as a recommendation because that's a bit safer, and obviously like do your diligence there. But yeah, I would say that I think if you're going to invest in China, I like Alibaba for all of like, for its diversification, for all the corporate events that I think are going to be going on around, it's split up. Like, I think that China is going to want that to go very well. And when you control an economy, it's easy to make something go well, because that's a real blight if they don't make it go well. They had this thing with Jack Ma. They're trying to get outside investment. They're basically like forcing the breakup of the company. Like, it has to go well. Otherwise, they look highly uninvestable. Basically, if you're just like, oh, I want to buy equity in a Chinese company, but basically if it gets too big or the CEO gets too powerful, we're going to crush it. Like, that's not what someone wants to hear in a stock investment. And like, can you imagine like in the reverse, who would want to put money in the US market if like our leaders were just like arbitrary? Like, if anything, we don't even enforce our antitrust laws like that are there in place. So we've gone as far to say like, hey, even our laws we're going to ignore. We're just going to let these companies grow as big as possible. But like things would change really fast. Like if they say enforce those trust laws, even though those are like logical and have reasons. And China is kind of just like, it seems like, and this is speaking from someone that like doesn't know all of the details, just has analyzed it a little bit. But it seemed a little bit like that, like the Chinese government and Jack Ma just like didn't get along, and they maybe kidnapped him or just like, you know, told him not to speak to anyone or whatever. Like, and that's why I can't be like, that's why I can never be too bullish on China and am always just like a little cautious, just because it's just like, oh, like I don't have to analyze that for US companies. Like some CEO like pissing off the government too much. And they just disappear one day. Like investments are hard enough to analyze and get right without those kind of like random factors getting in the way. So yeah, I would call that actually the problem and why I kind of glossed over a lot of the international investors. And you know, it's kind of like what we were talking about with crypto the other day, where it's just like I don't really like it because there's non-transparent options, leverage markets. Like there's like in equities, US equities, there's a single clearinghouse, controls the data, standardizes it. So, you know, there are faults and there are like things beneath the surface. And obviously we talk about that a lot, but at least there is a really broad attempt to get the data right and consequences if you get it wrong. And there have been consequences for people that don't think that that doesn't happen. There are consequences for getting it wrong. It might not be perfect, but in other countries, that kind of thing doesn't exist. Not even the standardization. The penalties are I would say even more loosely enforced if there even are like very clear laws. And so yeah, for me, it's one of those things that like if you're going to do an ETF, if you're going to do like an emerging market ETF, I think that is a great diversification. International real estate like ETF is another good like way to diversify and get exposure, or you know, look for emerging market. But like individual international stocks, I don't even want to touch because I consider that research burden to be too great to be able to get on top of it.
It's so crazy how you just mentioned that, like, if a company becomes too successful and powerful in China, that they just kind of take care of you, and that we just accept that as fact and we just move on. But that's how it is, which is kind of crazy. Um, do you want to do your update now?
Oh, I thought you had the fun one. I like that fun one. I was looking forward to it, and then I'll do my update.
Okay. I have two. No, yeah, just one more. One more. Okay, so everybody knows the classic game. I don't think I have to say the original name. So we'll just say we're calling this game the buy, trade, short. So I think we'll do this every Wednesday, hopefully. I'll give George three stocks, and he has to decide whether he's going to buy one, trade one, or short one. Today's stocks are Starbucks, Coca-Cola, and Celsius. So George, buy, trade, and short.
I think you can say F, marry, kill. I mean, we curse on here, so whatever. But maybe we'll just do that because I'll follow your lead a little bit. Okay. Celsius, Coca-Cola, and what was the third?
Starbucks.
Starbucks. Okay. Buy Celsius, trade Coca-Cola, and sell Starbucks. Starbucks is looking actually really bad. I just shorted it yesterday. Like that's a consumer stock right there. That is like, you know, not looking very good right now in my opinion. Celsius, like I'm a little less sure as a buy. We like it long term. It's great in the long term signals, but it got a little overvalued and now is just like getting hammered. Like it definitely traded too high. And then Coca-Cola, I mean, it's not the best as trade. Like I kind of like, you know, buy, maybe hold, sell. I mean, whatever. Like Coca-Cola is obviously a dividend stock and not the best one to trade. Like if you do own Coca-Cola, maybe you trade it around the dividend dates, but it's the medium one. Maybe we need to figure out a better word. But yeah, like I'm more like sure about the two that like, Celsius I like and Prospero likes, and Starbucks is kind of the opposite. But yeah, I mean, Coca-Cola is like tried and true. Like I do like they pay out their dividends. They understand their business. Like it's actually a consumer good that because of the dividends they pay out, I wouldn't really like get scared away if I've scared you too much about like consumer goods or consumer cyclical. But yeah, I am going to get my thing set up. We'll pause for questions if we have any new viewers because we have a new time. Thank you for attending. I'll do a slight pause for questions, and then I'll get you kind of set up on my
I have a question for you while the
Yeah.
people are typing. So when we're not live streaming this, is this the time that you would normally do it anyway, like right before
Yes.
closing?
Yeah, I like to, and just so people know, like the main reason I do it towards the end of the day is A, I like the full day of data, and B, I also like, I just like to, when the market opens, a lot of times you have no control. You might be asleep. Like sometimes I'll wake up early if I'm really concerned, but I don't want to have to wake up at 4 a.m. And obviously for West Coast people, maybe you can stay up and see. But like a lot can move. So I like just to like adjust my portfolio. Like how I like to think about it is like, I like to look at it like it might go in the wrong direction for me tomorrow. And like on a continuation of this, and like the way my portfolio is set up, and I can just like start. And this is like, you're about to see some paid Prospero features for free right here. And so I'm looking at it. We've been doing really well lately. I have like a lot of these shorts. Oh God, this one snuck up on me. I wanted to maybe exit this. But basically like what I'm going to do is I'm going to take, I'm going to go to my little like option sentiment system. I'm going to grab our live tickers here. And none of you get this, but I get it. Sorry to brag. These are like the most current metrics. We're going to go in here, and I'm basically just going to grab the current net option sentiment. And like, these are not all features that we have built out yet. So I am like, if you're not on our Discord, this is probably the best way to get information like this, other than just subscribing to the newsletter. But basically, I'm like grabbing the net option sentiment here, and I am going to throw it into current net option sentiment, and then I'm going to go look at this technical analysis priority list. I'm going to sort it. What's your problem? Oh, I know what your problem is. Okay. And then I'm basically going to like look at these like flags, these like higher net option sentiment. And basically if it's higher, we're looking at, potential shorts. And like what I see right away is I see IAC, and I see that it's at 71. So the first thing I'm going to do, and this also caught my attention. So the first thing I'm going to do is I'm going to pull up Prospero, and sorry, I'm not showing you this, but I will talk about it a little bit. And I'm going to see the trend on net option sentiment, because that's like the most important part to me to start. And IAC is trending pretty high. I probably want to close this, but I'm going to take one more look. I believe I have it open here. And I'm also just going to take a look at my technical screen for the QQQ to see like the direction of the market. It does look like it's closing like pretty nicely here. Wow, it moved. I definitely want to close out a good number of these shorts based on how it's moving. I think I'm in the wrong screen right now. Yes, I was looking at NSA as one of mine, but yeah, it got out of control a little for me on here. I do want to see if this is worth closing while I'm here. I'm taking a look at the 2 hour, and maybe I'll hold on to it. But I do want to see this. IAC is the one. Yeah, I don't like that 1 hour trend right here. I'm probably going to drop it, but I'm just going to take one more look at 30 minutes. And like, yeah, and basically like what I'm looking at here, this is a pretty complicated setup, but I'm looking at, these are EMA lines. And I'm basically looking at it breaking through. You see, it's kind of like rejecting them earlier and now it's breaking through. So we're definitely going to drop IAC. Now we want to look at CWEN. That was the other one that was like at 80. And wow, some of these are getting pretty big. We're going to look at CWEN. It's at 62. It's kind of been hovering around that as the price went down. So we might hold that for another day, especially. But we're gonna take a look at that. Oh, that's looking maybe not great to keep holding. Yeah, we may get out of that because I think we're pretty profitable on that position. And we might just want to like take our profit. Like, see, this is kind of encouraging. And now I just kind of want to go and see what our gain is on CWEN because I think it's pretty decent. Yeah, it's at 6. It was at more earlier. It's going in the wrong direction on us. I'm probably going to close that one out too. Just because like overall, like I might do this differently. But right now, what I'm trying to do absolutely is reduce my short exposure after this strong day today. So I'm looking at some of these other ones. SSYS. Let's see how profitable I am. That's a good one. Let's just check out. That's a little higher than I would like it to be, but let me look at the options sentiment trend. Oh, it's actually going down, but it shot back up. It was going down as of noon. So yeah, I think I'm going to take a look at SSYS as well and probably get rid of that unless I see something here that convinces me otherwise. That's like looking all right, actually. SSYS. Oh, is this like, I think this is saying it goes down. Yeah, that's actually, I might be convinced now. Yeah, it does actually look like this especially is, we're probably going to hold that one, even with the trend. But I'm going to look at the daily too. I got to think more about this one. I might just exit to be conservative. I'll probably do that because I think I just want to reduce all of the short exposure here. All right, I'm going to look at a few more. And then after I get rid of these shorts, I do want to increase my long exposure a little bit. MGM's a big profit one for me. But I want to take a look. And that one's just like a little higher. Oh, PK is something that I definitely want to look at because that's a gain. We've held that one for a while. I'll probably look at those. Like I want to make sure I get the long in before. Yeah, PK, I think we're almost definitely. PK has a really bad option sentiment trend. So I'm actually just going to take a look at just this. Oh yeah, we're getting the hell out of here. All right. So our list, and I'm just going to do this to remind myself. We want out of, is app turning on me? Yeah, we're getting out of app too. I've been looking at that one. I just know. We're getting out of app. We're getting out of IAC. We're getting out of, what was the other one? Do you remember, Steven? Oh, PK. And I think CWEN was the other one that we knew we wanted to get out of. Mogo, VSH. Let's take a quick look at VSH. Yeah, that doesn't look good. Yeah, I want to see like 4 hours. How about 2? Yeah, we're definitely. Oh, that's interesting. We're going. All right, I'm going to check net option sentiment trend, because I don't see a ton that. It's turning up a little bit. This is like this is a tough call. All right, I'm going to look at like 45. Yeah, I think we're getting out of this too. We're just trying to reduce our overall exposure. So it's good. We're going to get out of VSH because it's a little elevated. I do want to check on Frog because Frog it's just so high. Like, okay, I think we're getting out of Frog too. Ooh, let's look at 1 hour. Yeah, and you're up now. Yeah, we're getting out of Frog. All right, that's what we're getting out of. So you guys get to see how the sausage is made a little bit here, and then I'm going to see what we're getting into. And the way that I do that is I'm going to pull first I'm going to figure out what filter I want to use. And I think the filter that I want to use is, we're seeing some tech. So I think I might even want to do, I don't necessarily want all of that. I've got an idea. I think we want to use this one. Yeah, we'll use this. And I'm just going to I want to do short pressure less, and I want to do growth greater than 50. That's how I'm going to basically control for the fact that I don't want stagnant companies because of the way tech is performing today. And I'm going to take one more look at QQQ and SPY net option sentiment. All right, QQQ is at 44. It's looking very good. SPY is looking, it's at 13. Okay. I'm not as thrilled by that. Okay, so we're just going to do this. We're going to go. I have the filter I want to use. Now I'm going to go in, and actually this process is going to be, if you hung around for us this long, this process is actually probably going to be the most helpful, because I will show you how I do my check beyond the metrics. So I will do this. Then we got social. Then we got profitability. Steven, are you impressed with my Excel skills?
Oh my God, you're a wizard. I can tell you do this every day.
Many years of practice. But I don't even get to do this anymore. This is just what I did in my youth. Okay, so we have this, and then let's run our little like filters. We're gonna run less than 70, and we want growth. Yeah, we're getting out of like some of these. Oh, look, PayPal. It's been a while since I've seen that. Growth greater than 50. Perfect. All right, now we have, I think what I want is 20 names. And we already have some of them. So, oh no, that's not what I wanted to do. I missed a step. Oh no, this is also in the wrong. Ugh, this is gonna be annoying. Never mind. I have to
we got a comment from Chris who's saying, yeah, he's really impressed with your Excel skills as well.
Oh, thank you, Chris. I was just making some errors there, but yes, this is from when I first started my career. I probably spent like, I don't even know how many hours a day in Excel, just like hammering through building models. Like, I was like actually showing my foreclosure algorithm the other night. Okay, so now I'm gonna go here. I already own some of these, so I'm gonna like skip them, and you're just gonna see like really easy. Anyone can do this. I'm taking a look at the technicals. Bad time here. See, no, PayPal's a no. I think I'm going in the wrong place. Yes, I am. All right. Adobe. I've had my eye on for a little bit. ADB, ADBE. How are we doing on time? Okay. Neutral all around. You know what? Let's take a look at what Adobe's net option sentiment is. Net options, Adobe 83. I'm going to just take a quick look on my phone and see what the trend on that is. And like, just so you guys know, I'm looking for stable growth on net option sentiment. I want something going up, and Adobe looks great. We're going in. Adobe. Now let's check out Rope. And we don't need to do a ton of these. We're closing out a bunch of shorts. So I do like Roper. We're going in Rope. I've had my eye on it for a little bit. All right, so we're going in Rope. That one's like better. I went in with some looser technicals than I normally do. Microsoft, I feel like, is a constant disappointment, but we'll check it out. Microsoft. No, sorry, Microsoft. You are a constant disappointment. All right. INTC. Oh, Intel. What's going on with you? Oh, yeah, definitely Intel. All right, we're getting Intel. Hubs. I think we've already had one of those. No, sorry. COO. I am not buying MLM. It screwed me over too many times. I don't even care. I'm not even going to look at it. No, sorry, not good enough. SNPS. We've taken it on a run. 10 futures. All right, we're pacing well on time. Oh yeah, definitely SNPS. All right, so now we're going to go in to our filter. Mark. Oh God, that was scary. We're going to mark Adobe, and hopefully that one doesn't burn me on the technicals. We're going to mark. Why are you not being? All right. We're going to mark Rope. We're going to mark. What was the other one? We said INTC. We're going to get rid of this. Get rid of both of these. And did we have one more? I feel like we did. Oh, yes, SNPS. Where is that? It got left out. Well, we don't need Goog twice, so welcome to the big time SNPS. All right, but now we have to make sure that this is going to match. All right, LAD, COO, SNPS. So and now we're going to paste them correctly. Yeah, this is just a little. This will make our lives a little easier. Let's just get ourselves an extra row. Oh, yes. At one time, you guys now see, at one time, it was called gain, not upside breakout. We changed it. A little glimpse into the past for you all. All right, there we go. Now we are going to do this. We're going to go back into our, oh no, we're going to make sure we're not liars. We're going to say full screener. Then we started doing this. We're going to say maybe I can't title with I didn't realize how much time alone I needed for these to get my little headlines. All right, so we're doing this. We're doing that. That is accurate. We'll do this. We're going to do this. Paywall this. Let's grab our what was the last one? I see. I don't know. I'm in a rush. I don't know why I did all those commas. I don't normally have observers for this.
Pressure's on.
I know. Oh, wait. We averted a tragedy here. Gotta do this. I know the closing bell is almost here. And I'm gonna get this out in time to handle any questions about this. All right. Make sure this isn't singing out. This is right. Blah blah blah. Is that the right date? Yes. All right, there you go. You guys all saw how I do this. Any questions? I actually like most of it, but like I think everybody stayed for that. I thought maybe I'd be losing people. You know, maybe the Excel manipulation excitement kept people staying. But yeah, turning around like of the ones I added, I think SNPS is something that has been like in and out of the portfolio. I like what they're doing, and they obviously had great technicals. And then yeah, like on the bear side, just like I'm being conservative. I still am probably more bearish than bullish, and like the portfolio was 56 bears and nice. 56 bears and 21 bulls. So obviously I just put a small dent in there. Now we're talking about like 50 bears and 26 bulls. But that's kind of how I approach things and how I would recommend approaching things. Like there's only been 1 or 2 days that I just completely changed around my portfolio. It's like I much prefer to be like, oh, it looks like it's going maybe a little bit in this direction more clearly. Let me just like cycle out my least favorite shorts, cycle in my favorite longs. But yeah, anything else? Any questions from you about the process, Steven?
When you were pulling up the stocks in that other thing and it had those 3 charts, what was the information it was giving you?
Oh, should I pull it up again?
Maybe the people could see it. It's a little bit small on my screen since it's like.
Yeah, I'll share my screen again. So this is kind of like how the story works with Prospero sometimes. Like one of my co-founders, one of his old best friends, like actually like ended up messaging me about Prospero. And he ended up helping me with some model portfolio stuff on the Discord and like teaching me. So this is called a TTM squeeze. I honestly can't tell you what it is, but like I look at like anyone that looks at MACD, I kind of look at it similarly. I think this is very kind of useful to see like the momentum, and it's something about like buying pressure and selling pressure, but I found it to be very useful. And anyone that wants this gym layout here. I'm happy to share it with you. These are actually like these I think the stacked EMA, or no, I don't know what those are. What are you? These are basically EMAs, and I love this view. I love the waves because you can really just see, like you see down here, like the momentum is very different, and we can like zoom out a little bit. Maybe the daily would be better. Or any of you dailies, yeah. You can really like see as we go through time, like the difference between like, slightly bullish to like bearish. These bigger ones are pretty telling. And all we see here, and like why I'm still, this is actually like a good way to like visualize why I'm still pretty bearish. We haven't even broken through these EMAs that well, but it's heading in a bullish direction enough for me to be conservative. But yeah, I think that, as I said, I'm happy to share this. Maybe we'll even have, we'll try to have Jim on to explain it better than me. How frequently do I cycle out the bulls and bears? So this is actually, I'm about to write like an update on my model portfolio and my newsletter. And I think that's a really good question, Anthony, and one that I will answer by like showing you the actual portfolios. So this is obviously my bread and butter, and I sent out my weekly newsletter. So the newsletter picks, obviously, you guys are all like familiar with. If you look at this, it is 90 picks through 9 months, basically. So, we're talking about 10 a month. That's not a huge cycle. Now, the model portfolio, we're actually talking about 240 picks through 4 months. So we're actually talking about 8x the cycle. So like the easy math on that is obviously like we're talking more like what is that? Like 70, I don't know why I can't do math right now. Oh, it's about 60 a month. So we're talking about like 15 new stocks a week. And the really cool thing about the model portfolio, and what I'm like really proud of, and I really like thank anyone that's like in this Discord of like, and anyone that wants to participate in this, I'm happy. Like this is the best way to learn the signals. Basically, I have volunteers that are helping, me. The one map, the road map. Someone's asking me about. Basically helping me figure out how to monitor these, because right now we have 78 stocks in this portfolio. But why I'm probably even more proud of this than the newsletter picks is that like I'm obviously a trained equity analyst, and when I'm doing the newsletter, like I do that over the weekend. Anything I put in the newsletter, I'm doing a pretty deep dive on, and that's why I don't do tons of stocks. But what's in the model portfolio, I'm just literally doing what I did for you guys. Like some of these companies I haven't even heard of. I have no idea what they're doing. I'm checking the Prospero signals. I'm doing just a technicals check to increase my hit rate. But like, yeah, like to me, the performance of the model portfolio and churning through that many more stocks, like 240, speaks even more highly of the signals. Because the more stocks you have, the closer you're going to perform to the market. It's actually very difficult to have a portfolio of say like 500 stocks and perform that differently from ultimately like what the market does. So it does actually speak very highly of the signals that even with 240 stocks in a short time period, we're differentiating close to 40% from the S&P 500. And I am literally most days doing exactly what I just showed you. I'm getting some feel for the market. I'm figuring out based on that feel how much I want to change my portfolio or tweak it. And then I'm using a filter or a screen to figure out what stocks are kind of at the top of my list to add and what are at the top of my list to drop. Is that helpful, Anthony? Oh, I also saw another one for Chris. Is the model all in Excel? I don't know what you mean by model. Obviously, our signals are not all in Excel. But it is kind of funny that you think I'm tinkering away on some of like like net option sentiment, I can honestly tell you those are my formulas. That is actually me tinkering around in Excel. But a lot of our other ones have much more complex stuff than Excel. But yeah, that's why I'm like especially proud of net option sentiment and why it always makes sense to me, because that's just like literally something that I actually, you could say I learned that from machines and institutions, because basically when I was working with institutions, when I was building models, like complex nonlinear models, I would actually like study what those models used and the type of like features, data points that they used. And I actually learned from how they analyze things to how I wanted to, basically what they did well, what they didn't do well.
George the Machine Kalis.
Everybody got their questions answered. Thanks. I think this is a great like time. I think like it was also good that I like sent it out. Anyone, I tend to drop in these newsletter now. I'll remember to do it again. Just like a sign up for a calendar invite. So you guys can like get on this. But like now like if this is a good time for people, we're gonna do 3 p.m. on Wednesday in addition to our 11 a.m. on Monday. And yeah. Thanks for coming to our first Wednesday edition, everyone.
That was a good first episode. It's a bit of a change of pace from our Monday one, so I thought it was cool. And the market seemed to like it. We boosted the market a bit, huh?
Yeah, I mean, I'm if it's a bigger day tomorrow, that's going to be tough for my very short portfolio, but hopefully I made some good changes on that. All right. Thanks for coming, everyone. Bye-bye.
Thanks for watching. See you, George. See you Monday. Goodbye, people.